You've probably paid homeowners insurance for years, maybe even decades, believing you were protected. But what happens when the payout isn't enough to actually rebuild? What happens when you discover the insurance estimate is tens of thousands of dollars lower than what it actually costs to restore your home? As a contractor, I can tell you, we're seeing this more and more, and most homeowners have absolutely no idea it can happen until they're standing in the middle of a disaster trying to figure out how they're going to pay for it. So in this video, I want to walk you through some of the biggest things homeowners don't understand about insurance claims and rebuilding costs before you ever have to file a claim. One of the biggest surprises homeowners run into is the difference between an actual cash value policy, or ACV, versus full replacement cost policy. Actual cash value means depreciation gets factored in, and you're most likely going to get a lot less help from the insurance payout to put your house back together. And insurance may require that the house be put back to its before event condition, even if that condition was already compromised or not up to code. Full replacement cost generally means paying what it costs to replace something today. So let's use a hail damaged roof as an example. If you have what's called full replacement cost coverage, sometimes called RCV, insurance will generally pay what it costs to replace your roof today with comparable materials, minus your deductible. So let's say you have a 10-year-old architectural shingle roof and it gets damaged in a hailstorm. Let's say the roofer says it's going to be $24,000 to replace that roof. Your deductible is $2,500. The insurance payout could be around $21,500. In a true replacement cost policy, the age of the roof up to a certain point does not drastically reduce the payout, which is what most homeowners think they have. But if you have an ACV or actual cash value policy, you could be in for a big surprise. Let's say your roof is 14 years old and it costs $20,000 to replace today. Insurance may decide that roof is only worth $8,000 because of age and wear. So now you, the homeowner, has to come up with the difference. Most people don't even realize that distinction exists until they file a claim. And here's another catch specific to roofs. Most insurance companies are now putting coverage limits on roofs regardless of which type of policy you have. They may not pay actual costs on a roof that's over 10 years old, for example, or they may exclude certain conditions like hail or tree limb damage. Read your policy carefully to know what you have. Another thing homeowners don't realize is that insurance often pays in stages. A lot of folks think the claim was approved, so hey, I'm getting the full amount and I can get my house back in order. But not necessarily. In many cases, insurance pays part of the money up front, and then the remaining depreciation only gets released after the work is completed and documented, with the final payment often not coming until weeks after repairs are finished. That can create a huge cash flow problem for homeowners trying to start repairs, especially on larger projects. Your contractor is going to need to get paid in order to get the work completed. And a lot of contractors will not wait for you to get a check from your insurance company. This is why it can be very challenging to even find good qualified contractors to take on your insurance project. Another thing most homeowners don't realize is the limitations of their coverage. Here are a few examples. There's one situation we're dealing with right now that really opened my eyes to how unfair insurance policies can be. We have a client whose entire porch literally blew off the house during a storm. But part of the reason it failed is because it was never built correctly to begin with. It wasn't tied down properly, it wasn't built to the current IRC code standards, and structurally, it never should have passed an inspection the way that it was originally built. Now, you would think the insurance company would pay to rebuild it correctly and safely to get it up to code and standard. But that's not necessarily how these things work. Most homeowners insurance policies are designed to restore the home to its pre-loss condition, not to automatically upgrade it to current building code. Insurance companies get away with this because code upgrades are usually considered a separate type of coverage, and that can be called ordinance or law coverage. Without that specific coverage or endorsement, insurance may only pay for what was there before, even if what was there before would not legally pass code today. The problem is, as licensed contractors, we are legally required to build to current IRC standards. We cannot knowingly rebuild unsafe or non-code compliant structures just because that's how they existed before the storm. So homeowners can end up stuck in the middle, caught between what insurance wants to pay for and what the law actually requires us to build, and the difference in what those two things cost, which can be quite substantial. Another one of the biggest misconceptions homeowners have is believing their insurance policy covers any and all damage that happens to their home. In reality, homeowners insurance is typically designed to cover sudden and accidental damage, not long-term maintenance issues, wear and tear, or gradual deterioration. So for example, a slow plumbing leak that has been happening behind a wall or under a floor for months may be denied because the insurance company considers it a maintenance issue rather than a sudden event. Some policies also limit or completely exclude things like subfloor repair, mold remediation, rot, chimney leaks, foundation settlement, or repeated water intrusion. So a homeowner may have a bathroom leak covered cosmetically, but then discover the damaged subfloor underneath is considered excluded, or it's only partially covered. Unfortunately, again, many homeowners don't learn about these limitations until they're already dealing with extensive repairs. Here's something else that's important for homeowners here in Arkansas to understand. We really don't have an unlimited number of insurance companies writing homeowners policies here, especially in our more rural areas. So depending on where you live, the age of your home, your roof condition, your claims history, or even your fire protection rating, your options can become pretty limited pretty fast. The major insurance carriers we commonly see here include companies like State Farm, Farm Bureau, Shelter, Farmers, Allstate, and Travelers. Some of those companies are really good if you have a high-end policy, and some of them are absolute nightmares no matter what. What we're seeing across the entire country is insurance companies becoming more cautious about risk. Construction costs have gone up, storm damage has gone up, material prices have gone up, and insurance companies are tightening up coverage and claim payouts because of it. So homeowners are kind of stuck in the middle, right? They've paid premiums for years, they're expecting protection, but then when something happens, they discover their current coverage may not be enough. Their deductible is higher than they realize, and the repair costs far exceed what the insurance estimate allows. So, honestly, most people don't learn any of this until they're already in the middle of a very stressful situation, and that is not where you want to be when you find all this out. Now let's talk about the big elephant in the room. Why are insurance estimates often lower than contractor estimates? When claim adjusters estimate repair costs, they don't usually sit down and manually calculate repair costs from scratch. And in many cases, they don't even come out and look at the actual damage. The insurance company may very well be using desk adjusters who base their entire estimates off of photos or video. Most of them use industry estimating software systems, the biggest one being a program called Xactimate. Xactimate is essentially a massive construction pricing database used by insurance adjusters, restoration companies, and even some contractors. And it's used to create line-by-line repair estimates. The software uses regional pricing data for labor, materials, equipment, demo, roofing, drywall, basically every trade involved in construction. The adjuster measures the damaged areas, again, maybe not even in person, inputs the quantities, selects repair items from the database, and the software spits out an estimate for what the repairs should cost in that market. Now, to be fair, Xactimate itself is just a tool, and when used correctly, it can be very detailed and helpful. But the problem is the estimate is only as accurate as the information entered into it. If damage is missed, quantities are wrong, labor assumptions are unrealistic, or hidden conditions aren't included, the estimate could end up thousands of dollars short of what it actually takes to do the work. We see this a lot with exactimate material allowances. Let's say there's damage to a wall that's 2 square feet in size. The exactimate may say, okay, we're going to give you a 3x3 piece of sheetrock at $3 to fix the hole. Well, that's great, but I can't buy sheetrock like that. I have to buy a full sheet, which is more like $14, which is over 4 times what they're going to give me an allowance for. Or let's go back to roofs. They may say a repair takes 2 shingles, but again, I have to buy an entire pack of shingles. So when it comes to remodeling and restoration, extra costs and hidden conditions are extremely common, and insurance doesn't allow for that. Most contractors don't build projects by software pricing alone. They bid by real-world subcontractor bids, supplier pricing, scheduling realities, overhead, and all of that. So it's actually very common for homeowners to see a major gap between the insurance estimate and a contractor's real reconstruction costs. When a disaster strikes, it is an extremely stressful event. We had a tornado a few years ago that really rocked our community, and who you talk to and what you say after a disaster is extremely important. One of the biggest mistakes homeowners make is not understanding who to call first and what they should and should not say in those first conversations. Most people panic, call the insurance company, and start explaining every detail they can think of. But the reality is, you should keep your initial report simple and factual until an experienced licensed contractor has looked at the damage. It's perfectly fine to say, a storm came through and a tree fell on my roof, or we had water damage from a burst pipe. What you do not want to do is volunteer extra information that could complicate or limit your claim before you fully understand the situation. So things like mentioning old unrelated issues, previous leaks, deferred maintenance, or speculation about the cause of damage. The first call you make should be to notify your insurance agent that a loss has occurred. The second call should be to a licensed insured contractor with insurance repair experience who can assess the actual damage and help you understand what you're dealing with before major decisions get made. Another huge issue we see is homeowners allowing insurance recommended remediation companies to take over the project before they understand the costs involved. In many cases, these companies charge extremely high prices for dry out, demo, mitigation, and cleanup work. And those charges can eat up a massive portion of the insurance payout before reconstruction even begins. We're working on one right now where water damage occurred and the insurance sent a remediation company out. When we got there, the remediation company had pulled some cabinets off the walls and pulled a vanity, and they had giant heater blowers running to dry everything out. Their bill for that was $15,000 for that little bit of work. The insurance payout was only $20,000, which left us $5,000 to make all the repairs, but the repairs are actually going to cost another $25,000. So now we have to go back to the insurance company and fight with them to release more money to actually put the house back together. Had the homeowner called us first, we likely could have completed the mitigation work for closer to $5,000 and preserved far more of the original insurance funds for the actual repairs. The important thing homeowners need to understand is this: you are not required to use the companies recommended by your insurance carrier. You have the legal right to choose your own contractor, your own remediation company, and your own path forward. And last, I just want to throw in a word about storm chasers. There are companies, especially here in the South and in the Midwest, who follow storms specifically to pick up insurance work. While some of these companies are solid, a large amount are not. They are predatory companies who show up with the sole purpose of preying on folks in need after a storm. Whenever possible, use a licensed and insured local company to help you with repairs after a storm. When the storm chasers leave and move on to the next town, never to be seen or heard from again, your local contractors will still be there to help you with any questions, concerns, and to provide warranty repairs. And finally, let's talk about the issue that arises when you purchase a cheap homeowner's insurance policy. Okay, a lot of people shop insurance almost entirely based on price and monthly payment. Who is the cheapest? Who has the lowest deductibles? Maybe even who has the best commercials. But cheap policies often mean tighter coverage, more exclusions, lower allowances, more depreciation, or less protection when something actually goes wrong. And unfortunately, homeowners don't discover those issues until they need the policy. A lot of homeowners think they bought a good insurance, but what they actually bought was limited financial participation after a disaster, and that is not when you want to find out that your insurance sucks. So how do you combat all these crazy insurance issues? First, buy the best quality insurance you can afford. Second, sit down and actually review your policy before you need it. Look at replacement cost coverage, depreciation clauses, code upgrade coverage, roof coverage, flood exclusions, water backup coverage, and temporary housing coverage. Because the worst time to find out what your policy doesn't cover is after your house is already damaged. We deal with these situations every single day, and if there's one thing we've learned, it's this. The decisions you make in the first 24 to 48 hours after a disaster can cost you or save you tens of thousands of dollars. If your home has been damaged, don't try to navigate the insurance process alone. Reach out before you sign contracts, approve mitigation work, or make major decisions. We'll help you understand what's happening, what your options are, and how to protect both your home and your money before expensive mistakes get made.